Think back to when you first started trading, or maybe you are just starting out trading. Listen, it was hard then, and it is still hard for some of you now. But the reality is that there's so much information out there, it's hard to know what's right. So I'm going to show you the 3 concepts that made trading easy for me, and it has been proven that it works by many of my students day in and day out. Because let's be real, trading does not have to be complicated. Yet there are hundreds of people showing you thousands of different indicators or strategies to use, but that's just trying to sell you the dream. The main thing you need are these 3 simple concepts: some dedication and hard work, and the willingness to want to succeed, and you are 90% of the way there. So let's dive into the screens here and let's discuss exactly what those 3 concepts are. First and foremost, the most important concept to remember is to keep it simple. So the rule number 1 and the concept number 1 that I want you guys to focus on is to make sure that you're keeping it simple. And what does that mean? That means avoid having lots of different indicators, MACDs, RSIs, all these other fancy indicators on the chart are only going to talk you out of taking the trade and take eyes away from what's really important. So as you can see on my chart here, the only things I have are my manual support and resistance lines that I have drawn, my 200 moving average, my 50 moving average, and my 20 moving average. This is all that you see on my charts, and of course we have the volume bar down at the bottom as well. That's it. You do not need to have anything more than that on your trading charts. And the reason we keep it really simple is so we can really understand what's actually happening and where there's going to be selling pressure and where there's going to be buying pressure. We want to look at the raw data, and we don't want to see everyone else giving us all these different hints or suggestions of what to do. All these indicators that point arrows down in your chart, or all these MACDs that tell you when to buy, these are going to create biases for you, and you're going to avoid seeing what's really happening on the chart so you can make an informed decision. Number 2 is to eliminate news, bias, hype, and data. You don't want to let that news or the data give you a bias for your trading. So whether it was an earnings report that you think is good or you think is bad, or whether it was news that you think is good as bad, avoid trying to build a bias before the market opens. A lot of the times, a lot of the information is not interpreted the same way you think it should be, and that's where traders get into a lot of mistake. So if you think an earnings report is great, that's your opinion. It doesn't necessarily mean that's what the investors think, or it doesn't necessarily mean that's what the market makers are going to do. So avoid bringing a bias into the market, avoid the news, avoid the hype, avoid the data, and really just trade the raw price action, candles, volume, and what it's telling you on the chart. And with that said, the last thing is focus on price action and volume. So what is price action and volume? Price action is taking a look at these candles and how they react at certain levels in relation to what goes on here on the volume side of things. Okay, so we're going to dive in, and I'm going to show you a few examples of that. Let's go ahead and look at Nvidia, and we'll dive into exactly what's going on here. So we can see right here that we have resistance and selling pressure right at this old level of resistance that we've drawn in the pre-market this day, the morning, and all day. Right, coming into today's market, we know that this level again has been confirmed as a level, right? And we can see that our other level here from way back when is still being respected yesterday as well as today. So if we have to look at what game plan we will have going into today, the game plan is going to be this. We can see range bound price action being exchanged in this area right here, right? So we can tell ourselves that for an entire day after hours and pre-market, the stock has been consolidating in this range. So if price comes down under this level, we would technically expect a retest and continuation down, or if price gets up above this level, we would expect a retest and continuation higher. Okay, these are the only 2 scenarios that we would want to enter the trade on. Now let's take a look at what happens here going forward. All right, so market opens, we get this push, and we're getting this push, and as we're coming into this level, Again, we're seeing selling pressure. Why? Because it's been a proven level that we've seen selling pressure at. So let's take a look at what happens. Great, that selling pressure was valid. We sold off. Now we're at a place where we're thinking, okay, well, price never broke our top side level and price never broke the downside level. So what do we do at this point? So we wait, and then we see, bam. So this broke right here, all right? Now, what we're also paying attention to, guys, remember price action and volume. So we paid attention to price action. Now we can see on the volume bar, as price was moving down and up, the volume was decreasing, right? But as soon as we broke this level of resistance that we've failed to break for some time, the volume actually started to spike upwards. So now let's continue going and see what happens here. Perfect. So price is moving away from our resistance line, right? So our level here was valid and we continued pushing upwards. If you missed this move, what do you do at this point? Remember, what we discussed in the pre-market was that we want this move to happen and then we want a retest and continuation, right? So if you originally missed this entry here to take advantage of this $6 move, then you have to wait for a retest, and that retest has to form some sort of a pattern, all right? That's when your level of confidence should increase on taking the trade, right? So a retest is great, but when we have a retest that coincides with a pattern, that's when you really want to start paying attention and taking the trade, okay? So in this regard, we have the breakout that happens. We have the volume that spikes as well. Now we also have a pattern, right? So this pattern that we have here is confirmation that says, hey, we have a move up, we have a falling wedge. Falling wedge is a bullish pattern, and we have a candle close that now got out of that wedge and we can enter the trade, okay? So right here is where you want to enter the trade, right? Right there on that candle breakout. And as you can see, we start pushing away. And of course, your first target's going to be right over here from 926 to 931. Let's see what happens. Boom, you hit that level perfectly. And this stock continues moving higher to your second and third targets. All right. This is the exact thought process I want you guys to go through. I want you guys to understand this. I want you guys to have a game plan to really understand what to do before the market opens and how to react when certain things happen, okay? And a game plan is different than a bias, all right? Our game plan was what? Our game plan was that if we got out of this range that Nvidia was on, if we broke to the downside, we would wait for the retest and continue lower, or if we broke to the upside, we would wait for a retest and continue higher. And look what happened. That's exactly what happened. We've got the retest and we continued higher. So build yourself a game plan before the market opens, but don't allow yourself to have a bias. All right. We gave ourselves an if statement. If we get under this level, we're looking to do that. And if we're getting above that level, and we're looking to do this. All right. We didn't come into the market saying, oh, you know, this stock hasn't been able to break out 923 all day long, so I'm going to just buy puts. Right? That's not how this works. We have to wait for a system. We have to make sure we have a pattern, and we have to make sure that we're taking keeping a good eye on price action and volume. And when all of that comes together, then we can take the trade. When you're following these set of rules and instructions, this is what's going to accelerate your trading to that next phase where you can start seeing some consistent profits. Make sure you like this video, subscribe, and if you want my free guide on how to exactly do this step by step, comment the word, give it to me down below, and I will give it to you.